Software companies saw a pullback in markets over fueled fear surrounding AI, but our next guest has a few stock picks that he believes could weather a bear market. Let's go to Scott Chronert. He's U.S. equity and ETF strategist at Citigroup. Thanks for your time.
Pleasure to be here. Thank you.
What are the telltale signs, if there are, that a stock is being punished on fear rather than fundamentals?
Well, I'd say the way we're looking at it is the first thing we focus on is what's the trajectory incrementally of earnings and earnings growth expectations. And so to this discussion around software coming out of the Q4 reporting period, for the most part, we've seen estimate expectations for this year continue to work higher. So when we see that, but against a backdrop of very weak price action, our very quick conclusion around this AI framework is that a lot of the issue that's in the marketplace is mostly a function of how investors are looking at this category from a much longer term perspective, manifested in terminal multiples or terminal values, if you will.
Okay, so in another frame, how do you separate what will be a genuine AI business model risk from things that are just noise?
Yeah, so this is where it gets a little bit tricky, and I think we're still at the very early innings of sorting this out. But essentially what you're looking at here is the underlying software franchise in this situation and what it contains or owns in terms of its value add. Does it own the data that underpins its software offering, or is it a layer on top of another? So the point here is that owning the data seems to have a playthrough or read-through that is more positive at this point in time, whereas others may not have that same dynamic. Now, software as a subscription is also under pressure because there is some added element here of what does this mean for the ability to continue to drive positive price returns, if you will, in terms of the product offering itself. So high-level way, the market's sorting this out sort of company by company. Not all software companies are going to fall into this in one specific bucket, but generally speaking, where you're seeing the price performance differentiation, it's according to this view of what do you have here as a software vendor that really does maintain its mission criticality to its user versus something that maybe is less so.
Okay, so some of that should be quite clear. Why do you think investors aren't making sense of the fact that some of these companies do have data that they own that nobody else has that they supply to their clients?
So right now we're in this massive phase of uncertainty as it pertains to the software sector. Now, we thought that going into this year, a lot of that had been priced in during Q4. If you look at the Q4 performance for the S&P software sector, it was somewhat of a laggard. It actually hit oversold levels back in early December. And so our view is that the market had been already differentiating between, let's call it the haves and have-nots in this sector, but that the sector was already discounting some of this uncertainty. Fast forward into what's happened going through the Q4 reporting period, and it sort of got triggered around some product offerings around the time of the Microsoft earnings, is that there was a concern in the market that some of the AI-triggered alternatives are very quickly potentially coming into play. So essentially, long-winded way of saying a very short story, the concern in terms of disruption to current software offerings has kind of sped up and it's magnified into sort of an uncertainty that's permeating for the most part across the sector.
You have a stock that you believe can be a winner in a bear market, which is Palantir Technologies. Tell me why you think it'll keep winning.
Well, there are going to be names like this that I think have a very compelling value add component to it. I think we kind of layer that across what we talk about Microsoft as another example on this. And so what I would say is that there are going to be situations like this where you're still either in a very advantageous place from an infrastructure perspective, which is where I put Microsoft, versus still very early in a growth phase. So I think, again, the point here is that as we go forward within software, we do think there's this overarching concern that will take time to ferret out. In the meantime, there is some room for company-specific differentiation here, But the cloud over the industry group, no pun intended there, we think is one that probably persists. Now, what we've done is try to tease out where this potentially shows up from a terminal multiple or terminal value perspective. Our point is that we've priced in a fair amount already. And so we've been talking about and looking for some stabilization in software, which we had gotten in the past few days, although that is a bit mean reverted today anyway.
Okay, let's talk about one or two stocks that you do like right now. The first one is Dominion Energy, D on the New York Stock Exchange. What do you like about Dominion?
Well, I'd say here there's just an underlying theme that amongst the energy plays, that there's going to be an ongoing need and demand for energy to power data centers. And we're going to look for ways to play this wherever we can. And so I think what you're going to see is traditional utilities come into the fore. You're going to see also alternate energy stocks begin to recover some lost luster. And so where this fits is within this general genre of looking at the demand for power over time, where we still think we've got some tailwinds.
Okay, let's get to another stock you like, which is Microsoft, which did report earnings, and then the stock started to sink, got the same concerns about the business model and subscription to software.
Yeah, so what's happening here is obviously you've got a market leader within S&P 500 software. Microsoft is literally over half of that industry group weight. The underlying infrastructure that is built around Microsoft, we don't think goes away anytime soon. They've got many paths by which we think fundamentally they can be a winner within this AI playbook. And so when you're looking for sort of a best of breed traditional company that also is one of your top 2 or 3 capitalizations within the S&P 500, we think Microsoft, for its durability but more recent valuation reset, really stands out.
All right, Scott, I got to leave it there. Great to talk to you. Scott Chronert is U.S. equity and ETF strategist at Citi.